Have you noticed the strange turbulence shaking tech stocks lately? The QQQ, the pulse of Silicon Valley, is flashing confusing signals. Is this the calm before a massive tech breakout, or the first tremor of a market crash? Let's break down what's really happening behind the scenes. Welcome to Dollars and Cents News, where we read the markets before the numbers speak. Today, we're diving deep into QQQ, the ETF that tracks the Nasdaq 100 index, home to giants like Apple, Microsoft, and Amazon. QQQ isn't just a financial instrument. It's the heartbeat of the innovation economy and a mirror reflecting global market confidence. Lately, volatility has shaken the markets. Despite a last-hour rally, QQQ closed in the red, signaling uncertainty across Wall Street. One major reason: the ongoing U.S. government shutdown, now stretching into its 10th day, fueling fears about political deadlock and economic slowdown. Meanwhile, the University of Michigan's Consumer Sentiment Index dipped again as inflation and tariff concerns dampened optimism. And when consumers lose confidence, the ripple hits the markets hard, with QQQ feeling it first. But this isn't just an American story. A potential peace deal between Israel and Hamas in Gaza has eased fears over Middle East oil disruptions, cooling down global energy prices and reducing market tension. Across the Atlantic, however, Europe faces political turmoil, especially in France, where leadership uncertainty has dragged down the euro. These global shifts may seem distant, but they ripple through investor psychology, and QQQ reflects every tremor in global sentiment. On the policy front, the IRS's new tax bracket and standard deduction changes for 2026 could put more money into consumers' pockets, potentially boosting spending and tech demand. But here's the catch: adjustments to tariffs and the removal of the de minimis exemption could drive up prices for electronics and personal goods, squeezing profit margins for tech companies. That's a delicate balance investors can't ignore. Looking ahead, QQQ's path will be shaped by two opposing forces. On one side, potential Fed rate cuts could spark a bullish rebound. On the other, political gridlock and tax pressures could extend the volatility. My take: QQQ isn't in crisis, it's in transition. We're seeing a market recalibration before the next growth wave, powered by AI innovation and tech dominance. But patience will be key, because this phase will test investor discipline more than ever. So what do you think? Will QQQ lead the next tech rally, or are we standing on the edge of a new bubble? Drop your thoughts in the comments below, and don't forget to like, subscribe, and turn on the bell so you never miss our next flash info market breakdown, because behind every chart there's a story worth telling.